You're listening to the Moneyweb Now podcast series with Simon Brown. Live streamed every weekday at 6:30 a.m.
It's Tuesday, 21 July. We've got UK unemployment data due in a couple of hours. Expected 5% unemployment rate. I'm Simon Brown, coming at you live and loud from the Moneyweb Global Headquarters in Johannesburg, South Africa. On the show today, Jimmy Moyaha. I want to touch on Thungela. We talked around it back in March when results came out. It is one of his picks for the Moneyweb Investor Challenge. It was up, it almost doubled at one point early days in the war. The question is it still worth a look? It's given back much of that. Is coal still interesting? We're going to chat with Head of Wealth Management at Momentum Financial Planning. Consistency, biggest threat to one's investment plans or lack of consistency. And then we're going to chat, talking FNB. They had their latest retirement survey. An increasing number of South Africans have a retirement plan. That is really good news. The question, I suppose, is it a good retirement plan? This podcast is brought to you by Stanlib Asset Management. Invest in more global opportunities through their partnership with JP Morgan Asset Management. Morning headlines. Moneyweb Discount founder's son quits board. It leaves Ivan Saltzman as the only member of the founding family still involved in the group. And Business Day, the $6 billion hedge decision that turned into a $58 billion boon for AngloGold Ashanti. Former CEO Mark Kutufani reflects on his decision to close the hedge book in 2008-2010. I remember at the time, market wasn't convinced, but it was a good trade in the end. Morning markets. US is mixed. S&P was down 0.2 and Nasdaq is up almost 0.1. East also mixed. We've got Sydney up 0.4%. Tokyo is open again 1.8% higher. Hong Kong is down 0.1%. Tencent down 0.9%. Commodities mostly green. Gold futures $4,048 an ounce. Brent is the red, 88.67. Platinum 1,615. Palladium 1,267. The rand is 16.49. Bitcoin 65,500. Top 40 opening call, a green open, 26 points or 0.03% higher.
Moneyweb Now on the money. Also available on podcast.
Chatting now with Jimmy Moyaha. Jimmy, appreciate the early morning time. As I said in the intro there, for the Moneyweb Investor Challenge, one of your picks, well, to be clear, one was Sasol, done spectacular. The other was Thungela Resources, which is coal. It's been a wild ride. We chatted back in results back in March when they came out and they were managing what they can, which obviously is production more than anything else. Your thoughts as the stock has come back quite markedly. Is there still an investment thesis here? Is coal an attractive option?
Good morning, Si. I think the coal story is very similar to the rest of the energy stories that have been happening out globally as well. If you look at the likes of Sasol, as you mentioned, any other energy play, it's a very clear conversation is the volatility in that space right now is pretty much the only real factor. If we're looking at Thungela as a company, though, without the volatility, let's take a look at some of the other important factors around that business. They've got quite a strong dividend yield. They are very, very cash flow accretive, which bodes well from a business perspective. Their all-in sustained costs for coal on average range around that $100 a ton level. They're able to consistently punch above expectations as they did in the interim results they gave us back in March. So really, from a company perspective, there's still very much a business case there. The only thing that you're having to contend with here is the fact that the coal price could either sell at $85 a ton, at which they're making a loss and taking an 8 billion rand impairment as they did, or you're selling at $130 a ton, which we were at that price as recently as a couple of days ago.
Yeah.
And then you're making money as a business. So the external factors outside the business that they have no control over, I think should not deter from the investment thesis around how that business is being managed. Now, of course, the external factors are a huge factor because they affect your top line revenue and then affect how it is that you manage the rest of the operations throughout the year. But if we're looking at a company like Thungela and you're looking at the share price, for example, we're sitting at about 100 Rand a share, coming out of, which basically means you're getting it at 2022 levels, February 2022, if I remember correctly,
Yeah.
which the same year, September of 2022, we peaked just shy of 400 Rand a share. So you're getting it at basically 4-year discounts with the volatility in the global picture. And if you're going to think about the volatility and trying to anticipate what could potentially happen with regards to energy volatility in energy markets, let's just cast our minds back to when President Trump returned to office. He demanded the Peace Prize because he was the most peaceful president. Then he went and proceeded to start a war. He then came back and said he has no interest in increasing energy prices, and then went and did exactly that. We still have more than 900 days of the Trump administration left. Now, I'm not saying there are going to be 900 days of volatile prices on the energy front, but what I am saying is if you're looking at the fundamentals of a company like Thungela, and you're looking to potentially get into a company that could benefit from upside, 100 Rand a share at the moment isn't the worst price.
Yeah, I take your point, absolutely. And just a quick look at that coal price. If you look at what coal was for 2025, I mean, it probably averaged, maybe 105, maybe $100 or there's about. Most of this year, it's been trading north of 130, 150. A quick follow-up. You prefer it to Exxaro, because, of course, that's the other option on the JSE. Are they broadly the same, or is there a distinction and you have a preference?
So from Thungela's perspective, they have the benefit of being able to operate out of that Australian entity as well.
Yeah.
The international operations then create a unique value proposition around export markets, around international pricing, and with exchange rates potentially in their favor, that could potentially give them a slight boost, a slight edge over Exxaro. Look, Exxaro, great run company as well. I've spoken to Exxaro CEO before around the performance of the business and how it is that they're managing their side of the business. I think from a out-and-out coal play, Thungela has potentially been undervalued and running cheaper than Exxaro. Again, both businesses, really, really solid businesses. I think when I looked at the particular business case, I had to think about a number of factors around selecting this for my pick at the time.
Yeah.
Understanding, of course, we can't change our picks throughout the year. So at the time of making the choice, there were some factors that swayed me in the direction of Thungela. Nothing against Exxaro's operations and what it is that they're doing there.
Yeah, I get your point. We needed to pick some stocks, I got to say. And your stocks were great. Mine, less so. We'll leave it there. That's Jimmy Moyaha. Always appreciate the early morning time. The Standard Flexible Income Fund delivers capital preservation and consistent top quartile inflation-beating returns. Let your money keep working with Standard Asset Management even after you retire.
Moneyweb Now, on the money.
Chatting now with Therese Grobler, Head of Wealth Management, Momentum Financial Planning. Therese, I appreciate the early morning time. Long-term investing, we often, I think we overcomplicate it in terms of what we're buying and how and when and where. And you had a really great piece out recently that says actually what perhaps matters more than anything else is just doing it, is just showing up every single month, is that consistency more than anything else is what's going to give us a good return over a lifetime.
Morning, Simon. I couldn't agree more. I think, missing time in the market is really a little bit more expensive than what we realize. So if you look at the consistency of investing, it is exactly that, trying to avoid time out of the market.
And I know that we're often waiting for, I don't know, maybe a salary increase, maybe a lump sum. And to be clear, both are useful, both help, but not the lived reality of most people. And that waiting means that we're not in the market, we're not benefiting, and we're actually falling behind as a direct result.
Yes, unfortunately. And I think that's one of the realities we as South Africans have to deal with. And people often ask the question every year, regardless of what's happening in the economy, is it a good time to invest? But I think our reality is that nobody consistently predicts market movements or salary increases or dispensable income. So the bigger question, I think, is to ask whether your long-term financial goals are still important and what you need to do to get there.
I like that, and then it's more a case of sort of staying disciplined through those changing market conditions. To your point, I mean, back in Feb, we would have said, sure, good time to invest, and then of course we had wars in Iran. No one saw that coming. It is sort of ignoring market and more actually responding to different life stages. You know, as we earn more, as we have family, as we ultimately move into retirement. Those are the more important stages rather than worrying about what the market is doing.
Absolutely. I think market turmoil will always be there. History has proven that to us. It's certainly an indication that it will continue. So rather stay invested, stay consistently investing what you can, and don't lose sight of those long-term objectives.
There's some practical strategies for building wealth in a. I mean, this is a tough environment out there. We've got fuel pricing hurting. We've got interest rates moving up. We've got another MPC rate decision later in the week. Practical strategy. I mean, is it really just sort of the good old fashioned debit order and fire and forget?
I don't think it's as simple as that. While I agree with you, sometimes we can overcomplicate it. I do think partnering with a financial advisor is really crucial. First of all, to help you determine what are your financial objectives. How should you go about reaching them? And then making sure that, you know, that you don't exhibit behavior that can actually define your short-term decisions and have an impact on that long-term financial journey. Keep it honest. It's about behavior. It's about discipline, and making sure that you partner with somebody that can help you navigate those short-term instances.
I take a point in that, and it's actually something which you've mused many times on this show, that your financial advisor is in many cases, they're sort of like what's the word I'm looking for? They're emotionally helping you with the sort of the volatility within a market. They're as much as someone who's talking you out of bad decisions as talking you into good ones.
I think the word you're looking for is a financial coach.
There we go.
And what that really refers to is about, you know, wealth is not often created just by contributing. It's about that discipline of contributing. So Momentum's research last year actually showed that households that work with a financial advisor, on average, have aggregated portfolios 9.5 times larger than those who go it alone. And I think it speaks back to that financial coaching. You know, it's almost like going to the gym. You don't often see those results that you would like in one fantastic gym session. You need to consistently show up, often with a trainer, to make sure that you get those long-term results.
Yeah, it's using the experts, and that's the point. And I like the gym analogy. I can go to gym all the time. I'm not the expert. I need someone to help. We'll leave it there. Therese Grobler, Head of Wealth Management, Momentum Financial Planning. Appreciate the early morning. Give your money the return at once without taking a flight with the Thungela Global Select Fund, an offshore equity fund submanaged by JP Morgan Asset Management.
Moneyweb Now, on the money.
I'm chatting with Renee Coughlan, Product Portfolio Manager, FNB Wealth and Investments. Renee, appreciate the time. Your 2026 FNB Retirement Insights Survey just came out. A ton of data in it. I think the absolute headline number that stands out, 73% of South Africans under 60 now have a retirement plan. This is up from 60% in 2025. That is a giant improvement.
It is very encouraging to see, Simon. So in the 4 years that we've been doing this survey, we always wanted to see a positive movement. And when we saw the 73% are now having retirement plans, it was definitely very encouraging. I think people are just engaging more with the story about retirement, thinking about their own experiences now, but maybe what they've seen of their parents retiring as well. So it is just becoming like more of a topic of conversation out there.
That is a fair point. I look out and I think, I don't know what's changed. I suppose it is just a evolution. I like your point that, of course, our parents are retiring. Maybe it's your grandparents, depending on how old we are. But we're seeing it starting to happen. And it is just an evolution and a conversation that has been, going on for as long as I can remember.
I think many people have avoided the retirement topic, thinking this is something I'm going to do when I'm 55. Or even like my own experience of my parents was my father only thought about it literally the day before he was actually going to retire.
Okay, that is very, very much last minute. The question is, they have a retirement plan. I suppose, is it a good enough retirement plan? And that's kind of like how long is a piece of string. And I suppose a plan's better than no plan. But of course, the T's and C's applies. How much has been saved? Is there enough disposable income being saved towards retirement?
Yes, absolutely. If you think about what a retirement plan actually consists of, the majority of our respondents said a retirement plan is, I have a retirement fund or retirement annuity. Mm-hmm. But that doesn't sort of give us an insight into how much you're contributing. Is it enough? What is that desired picture that you have for your retirement years? And is this one thing going to get you there or not? Because it's really about the layers of retirement planning. So it's a multi-layered exercise. And it's not a once-off. You kind of have to go back every year and look at, am I actually on track? Have I covered all my bases? Because just having the RA is not enough. Do you have access to things like emergency savings for a capital expense? Your geyser bursts, you have a big medical expense that you hadn't even thought about. So your plan has to be robust enough and layers upon layers to make sure that you actually are not going to fall into that gap of not being correctly in line for retirement.
That's actually a great point. Retirement, yes, it's a date at some point in the future there will be, but even that's become flexible. I mean, the idea that you worked and then suddenly you stopped, like in the example of your father, there's a lot more to it and there's a lot more planning around it. Tax efficiencies, I mean, maybe estate planning as well, maybe side hustles. It's a lot more than just, well, I've got an RA.
Yes, absolutely. And that's something I saw that was sort of becoming another topic of conversation this year, is that we sort of had gauged side hustles over time to say people sort of were filling maybe a small gap with a side hustle. But what we're seeing now is for under and over 60s, side hustles are actually becoming the new normal. So it could be about, I need to generate extra income, or I need extra income streams because I actually need more for my retirement plan than what I thought. But even retirees going into retirement, I mean that day one, I'm no longer driving to my office. Is now, what am I doing? I need something to engage my mind. I need to make sure that I remain purposeful. And I also would like to have those extra income streams so then I can go and do all the other things that I would like to do.
That's a great point. I mean, make no mistake, money is important and that's a huge part of retirement. But another huge part of retirement is now what? It's not, you retire at 65 with a life expectancy of 70. You retire at 65, got a life expectancy potentially 90 plus.
Yes, that's an important factor in your planning. So a lot of people sort of think, well, I'm going to retire and I'm only going to need money for 20 years. But when we're looking at mortality rates, people are living different lifestyles from what my grandparents did. They're much healthier. They're lasting longer in retirement. So you can't just do 20 years. You have to look at sort of a 40-year term and make sure that you actually have enough money to fund that. If you think about how many years do you spend working versus how many years could you potentially spend in retirement, it could be the same amount of years. So we really have to make sure that we keep those calculations going. And as I said, go and check in at least every year, 2 years, am I actually on track or not?
And that's a great point. And I hadn't thought of it that way. We might be retired as long as we were working. But there's also uncertainty. Yes. And I suspect just the hard, stark reality is that we don't quite know what those retirement expenses are going to be. And some of them, I mean, particularly healthcare, but perhaps just good old-fashioned inflation, perhaps family responsibility. There's a lot of unknown in retirement.
There is. And very difficult, as you say, to plan for the unknowns. But if we sort of look at a paradigm for me, was looking at what are people spending right now if they're under 60? Because it was always sort of this misconception that, when I'm retired, I'm only going to need 50% of my income. But if you actually look at how people are allocating their incomes right now, the under 60s and the over 60s are pretty much a mirror image. So we mustn't think that we are going to have all this extra money because we're no longer working. Those expenses have replacements of new expenses. So things I was looking at, like the cost of retirement villages. What is your medical aid contribution going to be when you are in your elderly years? What are those hospital expenses going to be? So I'm no longer driving to work or buying nice corporate suits, but those expenses are just replaced with other things.
Actually, that's a fair point. It's different expenses. Still expenses there, but lurking differently. We'll leave it there. That's Renee Coughlan. She's Product Portfolio Manager, FNB Wealth and Investments, the 2026 FNB Retirement Insight Survey. Appreciate the time. And that's our poll today on LinkedIn. Do you have a plan for retirement? I mean, the numbers we're chatting there with Renee, really good and absolutely moving in the right direction. T's and C's apply, of course, always a case of. But how's your plan for retirement? Have your vote, have your say, LinkedIn. That's it for today. I was chatting with Keith McLachlan yesterday. He, of course, Element Investment Managers, talking Netflix results, use of AI in some productions. Stock down 50% or so in the last year. We asked if it's worth adding to your portfolios. It was pretty much equal split between, great value, no, tough sector, and some of you saying, I'm just watching. Have your vote, have your say, LinkedIn. This podcast is brought to you by Stanlib Asset Management. Invest in more certainty to navigate volatile market conditions. We're live every weekday morning, the Moneyweb website and the app, 6:30 a.m. Podcast just after 7. Thanks to my team, Eddie, Nobokle, Nicole, Sabu, to you for listening, my guests for their time. My name is Simon Brown. This is Moneyweb Now. We'll chat again tomorrow. Money stress.
You've been listening to another Moneyweb Now podcast, posted every weekday at 7 a.m. on moneyweb.co.za. Moneyweb Now, on the money.